we are here with Justin Hertzberg from Forest Park FX. Justin, how are you?
I'm doing great. Thanks for having me, Jeremy.
No worries, anytime. Yeah, we've been in cahoots for a while now, and you're one of the guys in the industry that has an interesting perspective because as an IB, and I'm sure we'll hear more about some of the things that you're working on these days. You've got a really good handle on different brokers, and I'm sure you speak to a lot of different brokers. And yeah, I think this the format for this interview is really just to pick your brain a little bit about where you think the industry's headed, the landscape that we're at the moment, and really to touch base and focus a lot on what you believe brokers are doing these days in the interest of clients and to help clients out. So yeah, maybe you can give the audience a bit of a background to yourself, maybe how you got into FX in the first place. Just give us a bit of a rundown and we'll get started.
Yeah, sure. Happy to. I love my origin story because it's kind of comical. I started my career as an attorney and worked in that capacity for a little while at the start of my career, and quickly realized I was a bit more entrepreneurial than your average attorney. And I had an opportunity to go and work for another large firm doing commercial litigation back in 2009, or had the opportunity to go and work for an FX proprietary trading firm run by an FX fund manager who at his peak managed around $750 million. And, at the time I was 27, 28, and I thought, wow, FX trading sounds a lot sexier than being a lawyer. What did I know?
Sure.
And made the leap or detour, however you want to look at it, and just kind of went into the trading world. I hadn't traded anything other than baseball cards in my life, and didn't really know much about it. But I got to learn from some great people at that firm. Went on to work for a broker dealer in the U.S. that specialized in order routing and execution for equity and equity options. And I got to learn a lot about what happens after someone clicks buy or sell on their platform, which I know you know quite a bit about, but a lot of people don't really understand order routing and trade execution. And that was a really valuable experience for me. And I got to a point, though, after spending several years working for other firms, really having that sort of entrepreneurial bug and wanting to strike out on my own. And the one market that I really kept coming back to and enjoying was the FX market. And I knew how to get regulated with the NFA as an introducing broker, having done that before as an employee of other companies. And I quit my job a month before I got married and told my wife I was just going to take this leap and just started a company, got regulated, didn't have a single client, and just built up over time. And our approach to the market then, this was now 8 years ago, is really the same today, which was we always envisioned ourselves as a broker agnostic introducing broker. We weren't trying to fit a round peg in a square hole. We wanted to be a value-added provider to clients and help them navigate the brokerage landscape, which can be a little bit scary and overwhelming, and help them to just find the right fit for their particular trading needs. And it took a little while to get some momentum, but we've been fortunate, and we've been working hard for a long time at it now. And fortunately, the business has grown predominantly through word of mouth. We're really not a marketing firm, but a lot of people have found us through positive experiences of others. We since expanded the business to being regulated in Europe with the FCA, and the IB business is still core to what we do day to day. But we have started to branch out now into other areas where we think that we can leverage our experience and credibility and knowledge about what traders are looking for and what brokers are delivering, and sort of fill those gaps a little bit through some creative solutions.
Very cool. So maybe just for the audience, I'll just give a bit of a background. So Justin is an IB, which is an introducing broker, and what that means is he basically helps clients choose the broker. I don't know how much you're saying that you're broker agnostic, so maybe it's not so much in helping them choose which broker to go with, but more being there alongside them to guide them down the right path. So I wanted to just go back to just get on a personal level for a second. What was your wife like with you when you said that you were leaving, the lawyer world to jump into the FX side of things?
I have I have an incredibly supportive wife who trusted me to make good decisions for myself and my own career
Mm,
path, and for our growing family. And very lucky to have that support, because this industry, as you know, uh, is crazy hours. It takes you all over the world. It is not your typical 9 to 5 job.
mm.
And so I needed that support to sort of keep me going, and to allow me to stay focused on what we're doing. And she's still very supportive, although now with kids, our life has changed a little bit. My
Mm.
demands and my time have changed, as they have for you. But but it's still a flexible lifestyle, and she helps me to make it work.
Yeah, sure. It's funny because, I actually also had like a bit of a career switch as well. I was in graphic design, or classically trained in graphic design, believe it or not.
I didn't know that.
Moved into, yeah, and then moved into fashion. We started a jeans label, and that's actually how I met my wife. So she was the first model for the jeans, and so I took photos of her the day that we met, which was pretty cool. And obviously the rest is history. Now we've got 3 kids, but yeah, I don't know if I'm pretty sure you've met Alan Ben-Sion, who's one of the co-founders of Global Prime.
Hmm.
So back in the day, he kind of took me under his wing while I was doing the jeans label and taught me a few things about trading. And then I kind of went off on different forums and started hanging out on Forex Factory. And Steve Hopwood was another big forum that we were a part of, and developed my own strategies. So yeah, got a bit of a following over time. And then, we were trading through Global Prime, and basically the guy that set it up, Lance Rosenberg, just gave us the keys to it and said, why don't you guys see what you can do with it? And yeah, 10 years later, here we are. But I remember my wife is also very similar, it sounds like to you. I was very supportive, and, she didn't really know what we were getting ourselves into. I mean, if I'm being honest, either did I. But
Hmm.
yeah, we both have an interesting similar background, because you've seen the back end of a brokerage as well. And for us, that was so fascinating to come into a brokerage that had multiple prime broker relationships, and tier one liquidity providers that we had direct relationships with as well. So actually, a funny story. I remember when we first started. I won't ask which bank it was, but it was like we literally had no idea about the broker side of things. We, like I said, we just totally fell into it. And yeah, one of the first days we were there, we had a meeting with 6 bank executives came and basically sat down with us with like this leather bound printed book that they gave us, showing how much volume we were doing. And it was like something, I don't know, like $50 million a month or something, which is, nothing in the scheme of things. And they were kind of like, so what do you guys think you're going to do to lift this up? Are we going to see anything growing from here? And obviously back then, Global Prime just had a couple of clients. There's no one really running it and turning into something bigger than itself. So yeah, it was a funny meeting, and we basically had to like wing it almost, and say to them, look, we're going to try our best and see what we can do. And over the years, we really delivered for them and the other LPs as well. So yeah, having that understanding of how things work on the back end is cool for people like us, because if we speak to retail clients, we can then go and help them out and kind of build their knowledge in what's happening on the back end. Because as we know, there's a lot of talk in the industry at the moment about A books and B books. It's something that we're very vocal about. I don't want to hit you up too much on that, because I really want to know more about like your insights and where you see the industry is heading. But yeah, it's kind of like one of our missions is to almost like democratize for retail traders, to give them as much of an institutional feel that they're getting, that our institutional clients are getting. So obviously, as you know, most retail clients are on MT4, and now they're moving a little bit into MT5, which is very similar, just more multi-asset and a few other things. But we recently bought a new platform, ProTrader. So it's actually now Trader Evolution, they've renamed it to. And yeah, our clients are kind of slowly making the switch to a more institutional feeling platform that's multi-asset. And one of the things that we've given to our clients, I'm not sure if you've seen it, but I'd love to show you if you haven't yet, but it's our automated trade receipts, which basically show the clients which bank filled their trade, which proves to them that we're on their side, because they actually know that we're routing their orders to the market and not internalizing them, and profiling clients into different books and profiting from the losses, which a lot of other brokers do. But also really breaks down like the different legs of their trade, per leg, like how long it took to execute, who was behind each leg, or each part of the fill if it was a multi-fill, the depth of the order book at the time, as well as like a 5-second tick chart before and after, showing the actual movement of the market and where the trade was filled inside, where the LPs were pricing. So it's pretty detailed, and to be honest, probably overkill for a lot of retail traders. But for someone that is into understanding how their trades routed on the back end, they get to really see a very detailed kind of the feedback really helps them to guide, or I guess the traders that want to take it to the next level, they can use that to kind of guide their trading decisions as well. Plus, it holds us accountable to them. So I was just wondering, like, are you seeing any other brokers that are really pushing the boundaries a bit on, trying to give retail traders more of an institutional feel, or do you feel like a lot of brokers are doing more of the same these days?
Well, I am familiar with your platform and the trade receipts, and that's sort of been core to Global Prime from its inception, was to really be transparent and unbiased, I should say, in the brokerage space. You really position yourself just as a facilitator of trading, taking trading interest from your retail clients and pairing them up with institutional liquidity, and that matchmaking is core to who you are. And now these new elements and tools are just heightened levels of transparency that you're making available. And I'm not aware of any other firm on the retail side that does anything like that. You're seeing some interesting things overall, or I'm seeing some interesting things, overall in the industry when it comes to transparency these days. There is a demand for more transparency, but at the same time, the leading brokers are the ones that are, for the most part, growing through consolidation, or just because they have the balance sheets to weather heightened regulatory requirements. And those tend to be the largest B-book operators on the planet. And it's sort of a catch-22 situation where regulators want to hold brokers accountable to their clients. The clients want to feel like they're trading in an unbiased and fair environment. But the way that the industry is going from a regulatory standpoint is actually pricing out a lot of more boutique firms like yours that can't compete with the behemoths out there. So it's a strange situation, frankly. And even if we look back to MiFID II in Europe, basically they penalized firms that were STP, straight through processing brokers, because you couldn't guarantee certain things under MiFID II, such as no debit balance risk, when you do that, because you weren't a party to the trade. But if you're a B-book broker, if you're warehousing all of your client order flow, you can prevent against the client from going debit balance, because you're just the counterparty to that trade. So it was actually a sort of an unintended consequence that moved a lot of firms that were STP to being B-book brokers, which was really, really strange. What I will say is that there's a tremendous stigma out there as to B-book brokers, that they're actively trading against clients, and certainly there are some bucket shops and fringe parts of the world that you can't point to on a map that operate like that. But to a great extent, the big name brokers that are well established and regulated in multiple jurisdictions, and the ones that really matter, we're talking US, Canada, Australia, Europe in particular, they really do provide a fair and equitable trading environment. And they're not actively trading against any one particular client. They're typically aggregating all of that risk into sort of one account, if you will, and then managing that risk with sophisticated algos that hedge out order flow.
There we go.
Great. Yeah. Apologies for the disconnect there. Some temporary internet issue.
We'll stitch it up. It's all good. Yeah, you were talking about the broker models, and I think that where we got cut off is you were saying how different brokers can profile clients into a B-book and have different kind of algorithms that they do to exhaust the flow. But I'll let you take off from there.
Yeah. Oh, sorry about that. So I think the trend that we're going to see, though, is moving more towards what on-exchange markets do, where you have full order audit trails like you're seeing, where you have firm orders instead of quotes, which you have, talk about last look is a term that you hear about in FX, which leads to slippage. And, the model that you have is a good one. I think it's very transparent. It's very open and honest. It's certainly a great way to build trust and build a strong relationship with your clients. And that's something that's very core to the way that we operate. Because we're not a marketing firm, our business has grown through the successful management of relationships with clients all over the world. And to date, we probably have somewhere in the range of maybe 50,000 clients globally that are trading through our introducing brokerage relationships. And those relationships were sort of cultivated one at a time, if you will. And we do it a different way, but it's the same sort of thing. It's ultimately about accountability and integrity. If that's the way that you run your business, it will grow because that's what people are searching for. They're not going forward. We've seen the commoditization of brokerages, in my mind, to a great extent. They all offer the same platform, more or less. They all source their liquidity from largely the same parties. And there's only so much that you can drop spreads and commissions to a certain point. We're sort of there. I think the way forward right now for brokers is to find another way to differentiate yourself. And I think the key elements there are service and transparency. And those are things that we're working on with our business as well, in a different vein than the way that Global Prime has done it, but with the same objective of sort of lifting that veil of secrecy and shining light into the shadowy corners of the way brokers operate. And one of the things that we have done within the past year is we spun off a technology company called FPFX Tech, which is essentially leveraging all of the knowledge we have accumulated over the last 8 years or so in dealing so closely with all of our clients and all of our brokers to understand what traders want and what brokers are delivering and bridging the gaps between the two. So we're spending a lot of time developing proprietary indicators, for instance, that use the broker's actual retail client data to provide things like real volume indicators and sentiment indicators and order book indicators, so that traders can see all of that data in real time and they can actually incorporate it into the algorithmic trading strategies that they're developing. So for years, real trading volume in FX was a mystery. No one really knows what a particular broker is doing or where their traders happen to be sitting. But now we've basically created tools which can help a trader figure out, is this a high volume period or a low volume period? Where are all the resting orders in the marketplace sitting? So you can gauge from a technical analysis perspective where the market might go, or if there's a key inflection point coming up. So we spent a lot of time with that. We're also
just quickly on that point, if I may jump in for a second. So is that something that you kind of have to work with a broker to put maybe a plug-in or something where you can pull that data from them so that you can then go and inform clients with it?
It's a cooperative relationship. We do need the broker to let us in. But what we have done with our development team is basically find an accessible and fast way to extract that order, trade, and volume, and basically pump it back in through expert advisors and indicators. No different than running a Fibonacci or a stochastic or something that's based off chart data. So we have a suite of tools. Some of them are below the chart type indicators that you can use as EAs. Some are on the chart indicators that you can use in building EAs. And we're excited about that because the response has been rather effective. Did you lose me there for a moment, or am I good?
Yeah, that's okay. That's all good. Jump back for a second.
Yeah, the response has been very positive, where it seems that brokers are actually open to making this type of data available. They just didn't have them to do so. And so that's been an interesting project for us. Some of the other fun things
is that live at the moment?
Yeah, it's live with a couple brokers right now in soft launches where they're rolling it out to VIP clients that tend to be heavily algorithmic. It's not yet been made available by to the masses. That should be coming hopefully in March or April, and we'll continue to roll it out with we go.
And since we're buddies, do I get to play with it?
Yes, absolutely. We can give you some demos and we can do an integration if you guys can make your data available.
Sure.
And if we don't need data available on a trader level, we need it in the aggregate. So we're not looking for anything that's personally identifying information. But if we can get that aggregate data, we can create some really effective tools that your traders can then turn around and use. And part of the reason that we like this as as sort of an add-on to our service is that, again, if we look at ways that brokers and in particular Forest Park as an introducing broker can differentiate, it's not going to be on price, and it's not going to be on platform so much as it is on transparency. And if we can give traders access to data through a global prime, for example, that they can't get elsewhere, and we give them the ability to actually use that and incorporate that into their trading strategies, it's a tremendous client acquisition tool, but it's also a very important retention tool, because what you're giving that trader in terms of access to data is not something that they're going to be able to get elsewhere. And one of the tough things in this industry is developing sticky client relationships. You don't want to spend all this time developing a relationship with a customer, and then the broker down the street from you just decides to undercut you on price or offer some gimmick or trading bonus or something immaterial in the grand scheme of things, but it's enough to pull that client away from you. We want to develop relationships based on value propositions that are not commoditized.
Sure.
That's really what we're focusing very hard on these days.
Very cool. So yeah, I mean, this is really testament to the fact that you come from a trading background and you're an IB as well, that you can come up with these ideas that will actually help traders. Whereas from what I've seen, the vast majority of IBs are just simply, here's my website, here's who you can go with, here's who I'm, recommending because I think it's better with a rating system or whatever it is. But no one's really going out there and pushing the boundaries of what I've seen like you're doing. So it's pretty cool. And I wanted to touch also on community side of things. So we've got a Discord. I don't know if you've seen it before, but we've got about 5,000 clients that sit in there and chat, and we run competitions, and we engage them. We have mentor rooms where clients can find mentors to help them out. And these aren't mentors that we're saying go and check it out. It's like these are relationships that we've built from this Discord platform, which is people that don't know, it's where you can kind of type and talk on voice to different people in different rooms. But that's exactly it. Like building relationships through a platform like that is so fundamental. We've even recently hired three clients of ours into our support staff, and it's amazing because we get to know them on the Discord and we get to know what they're about, and we build that relationship. They understand our business because they're clients, and they can hit the ground running very, very quickly. So yeah, the relationship side of things is so cool. And I wanted to quickly touch base maybe on Clubhouse, and people around me will kill me. Luckily, no one's listening because it's all I'm talking about these days. Have you heard of that platform before?
What platform? Oh, Clubhouse.
Yeah.
Yeah. I have one of my best friends was a very early adopter of Clubhouse. He is, if I use the word addicted, it's going to have the wrong connotation, but he is becoming
he's addicted.
on that platform. He's in the music and entertainment industry, and he sits on panels probably 4 to 5 hours a day at this point, leading discussions for his industry. And it's a powerful tool. I think it's a powerful tool, like a lot of other social media. That one tends to be a bit more directed and controlled by your panels, and you can take people by the hand a bit more. You can also properly align yourself with other like-minded thinkers or other people for quality thought discussions around where the industry is going, or what do people think about this. It's a great place for feedback, to know if you're on the right track, to gauge what people really want. So you're not just shooting from the hip or thinking I've got the next best idea. You can actually confirm it to a great extent through the discussions and panels that are happening.
Yeah, look, so we're probably, myself and Sammy, one of the guys that we work with over here, we're probably similar to your mate, where in the last month we've spent like probably 4 or 5 hours, maybe more, each day, talking to traders or being in karaoke rooms. And we've got like this one karaoke room where 1,200 people join, and we bring people up on stage and they kind of battle each other for a big prize at the end of it. They've gone through the semifinals now. Just lots of different, really organic kind of conversations that are happening. But I love the trader community over there is very interesting, because what I found, and maybe it's the people that are putting their hands up to speak, people that don't know what Clubhouse is, it's almost like a stage where the moderators can sit on stage and people can listen almost like a live podcast, and someone in the audience can raise their hand and join the stage and ask a question to the moderators or join in the conversation. So we've been in rooms with like 600 Forex traders. A topic, one of them was, are all brokers thieves? So that was a fun one for us, because we were like, oh, actually, we've got something to say about this one. Another one, I stop losses for losers. Sorry, say again.
I was going to say, there's a point of differentiation for you guys.
Yeah, no, that was a good one. There's another one, stop losses for losers. They kind of like make these clickbaity titles to bring people in, but the people that are coming up on stage, they really understand trading. There's some really serious traders over there that take risk management very seriously. So yeah, I'm just extending an invitation to you that if you want to become my Clubhouse buddy and we can together go and, engage the traders over there, or different people in our industry or other industries, come along for the ride. It's very cool. And I was saying, like with Discord, that's kind of like our community that everyone's welcome to join, even if you're not a client. Any trader's welcome in there, but it's still like a closed community. We want to like engage more widely, and to me, Clubhouse is where that magic happens, especially once it becomes more open. So yeah, we'll see over time what it does, but let's maybe continue. I wanted to ask you, so in terms of like when you say building relationships with clients, that you then go and help find their broker, whatever it is, what does that look like on a day-to-day basis? Is it a lot of one-to-one conversations? Are you engaging people in a more wider audience? How does that work for you?
Hold on one second. My son just
go for it. No worries. Do you want to bring him on camera?
Sorry.
Okay. Everyone's used to it with COVID and everything. Everyone's used to the whole walking in while you're doing a chat, so it's all good.
Typically, I'd be tied up with helping get the kids off to bed at this time, but I'm happy to actually. So I appreciate the invite. So the relationship process is interesting. We've always taken a different approach to it, very similar to the way that you guys operate, which is extremely high touch. We've never been a firm that hides behind form fields or sort of nameless, faceless approaches to customer service and support. The way we've operated is that we don't stop our service at the time we introduce your account to a broker. We want our clients to know that we are always available for ongoing service and support for the life of the relationship, and not just as it pertains to the broker or the platform that they selected, but for any questions they have about third-party tools and resources, or law and regulation, or someone wants to go from being a trader to being a money manager. We can help them through that whole process. And we do that by making ourselves available. My signature block in my email is my direct dial office line and my cell phone. And it's the same ways that my wife can yell at me as this, a client can get a hold of me.
Who's scarier?
Oh, my wife, far and away. But the way that we manage it on a day-to-day basis is, if we do our job well, for the most part, the clients have a very smooth experience. They don't have issues. And we work very hard to vet all of the brokers that we work with, make sure that, like Global Prime, they're regulated, they're reputable, they're well capitalized, well run. They provide a fair and equitable trading environment for traders, because we want them to succeed. Because we're not a marketing firm, we don't want our clients to fail. We want them to be very successful. We want them to be happy with the experience and service that we provided, so that they will tell the other people in their clubhouse rooms or on their Discord channels and wherever else they might be, that, hey, Park is a good quality firm. They're good guys. They can help you. And that's really how the business has grown. The way that we sort of scaled the business is really through sort of, I'll call it influencer relationships. You have a lot of third-party service providers in the industry. They might be educators or market analysts, commentators, developers, money managers, people that to a great extent have some form of a captive audience. They have a value proposition that is tangential to the actual trading activity that's happening. And for their clients to get the most out of that value proposition, they need help on the brokerage side. And so we've tried to position ourselves as the natural extension of that sales and service effort by saying, listen, we understand the value proposition that you've received from XYZ company, and we can help you to place that in the right brokerage environment to maximize the efficacy of what you're looking to do. And that sort of funneled relationship has opened us up to a number of different trading groups, I'll call them, across the globe, that we're now a trusted source, much the same way that you are as a panelist in different rooms on Clubhouse. We've established ourselves in a similar vein, and it's our job to maintain those relationships. If we do a poor job with the continuing service and support element, or we introduce clients to the wrong type of broker, that damages our credibility tremendously, not just down the line. So we take that very, very seriously, and it's been the key to our success, I believe.
Very cool. Yeah, look, always the more we talk, I just see how similar our approaches are. So I appreciate that. I wanted to ask you, in terms of your clientele, a couple of questions maybe. How have you seen the demographics change over the last, say, couple of years? And also, what's like the one thing that people are really asking you for when they're looking for a broker?
Good questions. So I will say generally over the past 8 years, the demographic has largely remained the same. I think you're looking at people typically 25 to 65, probably 85% male. I will say that we are seeing more and more women, though, come into the market.
About time, right? They're so underrepresented.
Yeah, so it's great to see that. But the age range tends to be the same. We tend to see people that are typically college educated, that have some level of sophistication, whether through profession or proper training. But that's not necessarily the industry at large. It just tends to be our mix. We tend to have a bit more wherewithal, with more capital, with more savvy to them. And that's been great for our business, and we're happy to support those clients. In terms of trends, what I think we're seeing right now is definitely a move towards multi-asset, where clients don't just want to trade FX through the one broker's relationship. They'd like to trade CFDs, futures, cryptos. So we're definitely seeing a move in that direction. The countervailing issue is that, to some extent, regulation has made a lot of that more difficult, where you're seeing the ESMA leverage caps, and now the ones coming into ASIC in a couple of days at this point, are really changing some of the commercials and interest level for people who are looking still for what they consider to be the most optimal trading conditions, which tend to include higher leverage. You and I know that higher leverage typically does not mean better returns for traders. And you guys have always taken a much more conservative route than most others, which you'll probably be among the least affected brokers as a function of the leverage changes that are coming. And your clients, obviously, the same way, which is terrific. But you still see people that gravitate to the market looking to essentially cash in on a lottery ticket. They want to come in with a relatively small amount of money. They want to over lever their account, and they want to hope that they hit it right. And we really, like you, we really try to counsel people on slow and steady approach. Ease your way into the market. No one became a doctor overnight. No one became a lawyer overnight. Becoming a professional trader requires the same level of discipline and experience. And we want people to take it slow and just build that experience through screen time. There's really no substitute for it.
Yeah.
But not everyone is that patient.
I know. Yeah, we say over here there's really only one type of trader, a trader. Anyone else is a gambler. And a trader is someone that, is going to take it seriously, like what you're talking about, have that screen time, understand risk management, get in touch with themselves and overcome their impulses, be able to sit on their hands rather than have diamond hands, like, talking in GameStop or, back in the hodl days with crypto and everything. So, yeah, it's exactly right. People think that they can just go and flip their money and turn $1,000 into $1 million. And, high leverage does technically allow you to do that, but are you actually going to get there without blowing up your account on the way? Most likely not. So yeah, no, I totally agree. And I wanted to ask as well, in 2019 you were interviewed by Finance Feeds, discussing the evolution of broker models towards more transparent and accountable models. So it's been 2 years since then. Do you think things have changed at all in the industry, or has it kind of stayed more or less the same?
I think the intent to change is there. I think the obstacle to change has been the rapid evolution of regulatory obligations and changes. Right now, guys, to a great extent, and I know a lot of the other Australian-based ASIC regulated brokers are scrambling is the wrong word. It indicates that they're unprepared, but they have been spending and marshaling a great deal of time and resources to getting ready for major regulatory changes to the way that they operate. And that is simply something that always gets pushed to the forefront. It takes priority over other things that were pipeline items that they wanted to accomplish over a certain period of time. I believe that we're sort of settling in now, sort of post the new regs coming out in Australia, to a new level of stability, where we're not going to see such draconian and drastic changes to the industry. And I think it will allow firms, once they settle in, to then go back to some of those items geared to transparency, data sharing, and openness that they were at least interested in a couple of years ago. I can't hear you, Jeremy.
How's that? Can you hear me now?
Yeah, perfect. Thank you.
All right, great. I think my headphones just died. I was going to ask you, so, in terms of brokers that run an A book and a B book, do you think they should be made to disclose to clients if the client's being B booked or if they're being switched from A to B?
It's a complicated question because we're really talking about maybe 10% of the clientele that actually even understands the distinction or where it even matters. The average trader, and we're talking the overwhelming majority, probably 80 to 90% of traders, are probably better served with a B-book model because they're going to get faster execution because the order doesn't have to actually pass through the broker to a third-party counterparty. It just gets filled, and it gets filled up to a certain trade size and at a much faster speed. And that is to the benefit of the trader. There's nothing, if we're not talking about any other manipulation or insidious activity taken by brokers, the trader's actually better off to a great extent. If we're talking about the sharper flow, the ones that are working on low latency, high frequency type traders, news traders, the ones that are essentially predatory, they're preying on flaws and shortcomings in the way that orders and quotes are dealt with in an over-the-counter market. It affects those people, but then again, we might want to look at them in the same vein as bucket shop brokers that manipulate prices. They're both predatory. Neither one is actually playing a fair game. What I think would be a better metric than A book, B book would be something more akin to what you see in a national market system like we have here in the States with stocks or options or futures, where you have best execution obligations, where you're showing how quickly are you executing that client's order. Are they getting price improvement at X percent of the time? Or are they getting slipped X percent of the time? Those would be metrics to me that are more meaningful than whether or not a client is necessarily A booked or B booked. Because fair and equitable doesn't mean A book or B book. It really means what quality execution are you giving to the client? And there's different ways to deliver that quality. You guys have a very clear and unassailable way that you do that, and it's terrific. Other brokers that are still high quality, high integrity firms that operate some sort of market making or B book model are still high integrity firms, and they're still providing quality execution to traders and giving them every opportunity to succeed. So I think we have to look at metrics that are ultimately ones that matter to the end client from an actual trading standpoint, not from an optics standpoint, if that makes sense.
Yeah, it makes sense. So look, a couple of points I wanted to make on that is that, one of the things that really stood out to me once I started to understand the back end of how B-books work from, speaking to other industry participants that have seen that side of things, is that there's situations that when you switch a client from the B-book to the A-book, for example, someone that's trading in big sizes and all of a sudden, instead of getting perfect fills, they're now getting market impact when they're going into the real market. Or another example was, a bunch of traders all trading the same strategy on the B-book, making money, whatever it is. And, this is more like EA trading. And then all of a sudden, en masse, they all switched mid-trade into the A-book. And then all of a sudden, they just get whacked on their traders. They're all trying to hit at the same time. So to me, even if it's like a couple of different types of clients, and those aren't technically predatory types of trading or clients, to me, just because those clients can get impacted, that they should be given a chance that, when a broker switches them from the B-book to the A-book, to give them a heads up, because then they can at least say, okay, I'm going to go find somewhere else, or I'm going to get out of this position. First of all, give me a second kind of thing before it can destroy their account. So, that's one of the things. And yeah, it's definitely interesting. I don't know if you've seen
Go on. Sorry. There's definitely merit to what you're describing. The challenge is that if you forced every broker to disclose that, the reason that they would switch someone from a B book to an A book would be different at every firm. It would never be a standardized approach. And that's something that in my dealings, we have a number of institutional relationships as well, and clients that we facilitate on a large scale. Every liquidity provider's definition of toxic order flow is different. Sometimes
isn't with a B book like toxic order flow to them is someone that's making money, and they kind of got to move them to the other book?
It's not actually. So it's to actually go back to points where, let's say you have a bunch of algorithmic traders who are all running the same strategy, for example, right? So if euro goes above 122, you've got 50 traders that are all running a relatively benign strategy, but they're all going to go long. So that broker may have a risk tolerance setting on their market making desk that they'll fill orders up to 100 lots per click or 100 lots at a certain price. But if all of those traders hit them at the same time, maybe the aggregate position is 300 lots. And what happens is the broker has tried to provide high quality, fast execution, but through no one's fault or malintent, the aggregate size of that trade is so large that they're completely upside down. They don't have an opportunity to even hedge that realistically in the market. And you see that as well, where we don't even know if that trade's going to make money. But what it is doing is outsizing the market as that particular broker is making it available. And there's always a trade-off. If they want to give fast and instant execution, they can only do so to a certain limit. That limit tends to be greater than what the top of book price would be
in the interbank market if they were true STP. So there's, like I said, there's two sides to the argument. I don't think there's one right way, but I think what every firm should be striving for is best execution for their clients and transparency around that. And I think that is that's certainly something that you guys provide, and you are innovative and thought leaders in that process, far beyond what we're seeing elsewhere. But I think that's where the industry should go. I think you are leading, and that's a level of transparency and accountability that I think traders covet. It's great for you guys to continue to push the way that you handle trade execution, and help people to understand what makes it different, what makes it special, because that is, at this moment in time, that is rare. You are leaders in that category.
Yeah. And, at the end of the day, thank you for that. And I appreciate that. And that's cool to hear, someone that deals with a lot of brokers talk about us like that. So thank you. Maybe give myself a little pat on the back or something. But I wanted to say as well, in terms of like the industry as a whole, if the vast majority of brokers do BBook and, they kind of bring in retail clients that, for them, they don't mind bringing in someone that doesn't really know how to trade or is a beginner or whatever it is, because, it's food in the system or whatever you want to call it. I just feel like if the entire industry from day one, say 2 decades ago, there was no BBooks and you weren't allowed to do that, and instead everyone was able only and able to, focus on the client's profitability, and they wouldn't be focusing on the losing clients. It's actually the focus would be on winning clients. And then maybe the metric that brokers would use to advertise themselves would be like, who has the most profitable clients? To me, it's like an industry-wide thing that the focus is all, on the losers and not on the winners. And it's just a different mindset, I think, when you run an SCP brokerage that things change. But again, I don't want to go into it too much, but I appreciate touching on it. But yeah, maybe I'll put it back to you again. Where do you see your business growing in the next, couple of years? And I know we're running a little bit over time and you're probably got to get back to your kids. So maybe you can, close out with where people can find you. Maybe you can give your mobile number so everyone can harass you or something further.
Yeah. We're like you. We're trying to provide innovative solutions, typically through technology, and leveraging the strong relationships that we have with our brokers to do a lot of the things that you're trying to do, to make available to traders the access to tools and data that should improve their trading. Now, whether or not they make the pivot as traders to understand the value of that data and use it properly is not something that we can necessarily control. It's not something that the broker can control, but I think the trader at the end of the day deserves that access. And so we are trying to make what has never been made available in terms of volume data, sentiment data, order data in particular. We have developed actually a phenomenal on-screen risk calculator that updates your equity in real time, where you can gauge pip values and trade sizes and impact to your balance and equity and so on in real time to help traders manage risk better, similar to some of the things that you've touched on. We're also we've developed a solution that's already in place right now for proprietary trading firms, which we're seeing a lot of growth in right now, where firms are basically positioning themselves as trader training facilities. And they're saying, listen, if you can pass our evaluations, our assessments, we will give you our capital to trade. And the way that they're doing that is through very strict risk management controls. They're basically saying, this is the box you're in. If you want to graduate and trade our capital, you need to figure out a way to trade in a low leverage environment, in a low drawdown environment. And so we actually built end-to-end automation that does all of this for these proprietary trading firms. So we help them through the onboarding process, the account creation process, the risk management, most importantly, to make sure that traders are staying within those bounds when they trade. And we've essentially automated the process by which these prop firms hold their traders accountable. And it's a really growing niche within the overall industry. And we like the fact that we get to play a part in teaching newer traders how to apply proper risk management.
Amazing. And just to talk quickly on that point of risk management, it's funny, people, like we were talking about before, will come into trading, think they can turn $1,000 into $1 million and try and over leverage their account. But really, if you actually just take it all the way back and keep your drawdown really low, and you can make even just like 1% a month or 2% a month, whatever is consistently, then even if you're starting with a small capital base, over a 4-year track record, and it's actually very hard to find a 4-year track record of consistently profitable trading in FX, as you know, with the leverage and everything, and just that's not how it works a lot of the time, unfortunately. But if you can maintain that and just scale it back, your opportunity is almost endless in terms of attracting capital, because people are looking for that kind of yield. And if you can keep your drawdown low and stick to these kind of constraints, then over the long term, you're setting yourself up for the future to potentially run, a managed account or take funds from someone else or whatever it is. So if people want to reach out to you, how best can they find you?
Well, I don't know how you publish these interviews, but you're welcome to provide a site, which is forestparkfx.com. For those that are interested, my office line is country code 1-561-922-7616. My cell phone is country code 1-404-664-3057. I take all calls. I return all messages. I'm compulsive about clearing my inbox. Amazing. So someone contacts me, they will get a response.
So good. And ladies, just to reiterate, Justin is married, so please keep it strictly professional. Thank you very much.
Thank you. My wife appreciates that, and very happily married. But yes, I don't want to stay that way.
Good stuff. Same here, right?
Yes.
Look, Justin, is there anything else you wanted to chat about today?
Oh, just to your last point, actually, talking about if you just make 1% a month. Going back to my origin story of how I got into this industry, that fund manager who amassed $750 million in AUM got that way because he made 1% a month with half the risk of the S&P. And to an institutional investor, that was about the sexiest thing on earth. And sexy to a retail trader, but it compounds over time. And that's how you can go from being a small fish in a giant pond to being a giant fish in a very small pond. And he did that very great. It's a great mindset to have. Just want to make a little bit, keep the risk down, make a little bit, keep the risk down. Yeah, amazing. So on that, I have to ask as well, what was it like for him, once he started managing bigger money than, he was managing before? Did he just get given $750 million and said, go for your life? Like they gave us Global Prime and said, go for your life? Or it started over time. He was an investment bank. It was a fund manager at an investment bank who went out on his own. He had about $20 million in AUM when he left from committed institutional clients. And it took him about 7 years to grow to that extent, but he got investment from major institutions, from large endowments, from pension funds, from places that have millions or billions of dollars that they have to allocate through different investment channels to generate a return. And he was able to court that money by being incredibly consistent for a very long period of time. And that is a very rare commodity in this industry. And did you ever kind of want to piggyback off him and be mentored by him and become a trader like him as well and also manage that type of money? Or do you value your sanity? So it's funny. Great question. In the beginning of my early trading days, I really did. That was ultimately the big appeal and draw for me as a young kid, relatively inexperienced, was to somehow be in that type of position. A couple of things that I realized is, certain people like anything else have a certain aptitude for things and others don't. I wasn't the world's greatest trader. Despite being very intelligent, very disciplined, it just wasn't something that came naturally to me the way that it does other people. But I really loved the market and I stayed in it for that reason. But from his perspective as a fund manager, he enjoyed it. He was driven by it. To him, it was the equivalent of the Super Bowl or the World Series or the championship match of football or rugby or something. It was everything to him. And at the same time, every month before non-farm payroll numbers would come out, he would have to run to the bathroom about 10 minutes before the number came out, because there was so much at stake around major economic that it was very tough to literally stop. And so it, like anything else, it has pros and cons. He did it for a long time, and he's since moved on to actually the brokerage space, operating as an introducing broker, helping institutional firms with FX options, which was his specialty. But it's a tough life being a fund manager. It's an opportunity to make an absolute fortune, but it is a lot of pressure.
Yeah, a lot of scrutiny and people watching, and it's like you're sitting at home in your basement trading FX on MT4, right? It's a whole nother ballgame.
These firms that are allocating capital to fund managers are doing dives to your life that most people find beyond invasive. They want to know if you're going to divorce, if you owe someone money, if you have bad health habits. The types of investigative research you see in spy TV shows and so on is kind of what they're doing, because they don't want to just allocate their money to anyone who's going to go off the rails. They want who are locked in and at the top of their game.
All right. So speaking of top of your game, I'm bringing you into Clubhouse after this, and we're going to hang out in there. And if you want, you can bring your fund manager mate in, and we can make a room, and bring some traders in, because this is like, it's one thing just us having a chat and putting on YouTube or whatever it is, but when you're sitting there and there's an audience, people are raising their hands and asking questions, like, it's the coolest thing I've ever seen. Anyway, I'm not going to harp on about it. Justin, thank you so much. I really appreciate your time. You're a legend in this industry. You're an amazing guy as well. And it's a pleasure to be working with you. Thank you as well for all the kind comments. Super appreciative. I'm probably going to quote you on them and stick it up on my wall or something and feel proud. I don't know. We'll see. But yeah, we'll chat soon. Thank you so much.
Thanks for having me, and stay healthy out there. Be well.
All right. And guys, look, if you're looking for the right person that can help you choose the right broker, it's Justin. He's definitely going to introduce yourselves to us, which is awesome. No, I'm kidding. But, he's agnostic and he'll help you find the right place that'll suit you and what you're looking for in the market. So, Justin, thank you again for your time, and looking forward to doing this again sometime.
Got it. Take care.
All the best, mate. See you later.